If you checked a silver chart today, you might be panicking after seeing the 15% swing from the top to the bottom. But if you are on my mailing list, you received this warning 36 hours before the market even opened. I warned about a potential rug pull, among other things, because the rule of the game had changed. Today, I want to explain why I sent this warning, what was in it for people who missed it, and why, despite this massive red candle, I'm more bullish now than I was on Saturday for silver in the medium to long term. First, I want to clarify something. I didn't send this alert because I turned bearish and I thought this was the end of the bull market. It was mostly about a needed healthy reset because the market went too fast, too high. For example, here, if I put it on a monthly basis, you can see how it's almost vertical when you look a little bit further away, like this was the last crash in 2011. And as you can see, went sideways for a long time, and here it's like vertical. So there were so many indicators. It was just something I picked up, just like I did for the S&P on October 29th or gold on October 20th. It was just not a guarantee, but very high probability. And I wanted to share with people because I've seen too many times people buying at the top, selling at the bottom. And if they do it with leverage, they can ruin a portfolio very quickly. So this was more like here's what I'm seeing in case it can help you, not this is the end of the bull market. I also want to say a quick thank you to the people who replied to my email alert, because with their questions and their comments, I was able to change a bit the video to answer the questions and to clarify things. So thanks again. Unlike massive channels where your comments or email could get lost with no one checking it, I'm actually still reading comments and emails individually. So if you have anything to share or questions, feel free to reach out. For those who didn't read the blog, here are the top 3 things you need to know right now. First, there was a setup. So it started with the ghost rally during the closing of the Western markets, but Asia was still open. So as you can see, there was a gap, which is unusual for silver. And so it was moving rapidly up. We also saw the CME hike margin for the second time this month. And this is something that happened in the past as well. When you look at the past to crash for silver, the CME was hiking rapidly margin requirements. The last one was in 2011, and the one before that was in the 1980s. But back then it was quite different, and this is something I'll cover later in the video. The second important thing that you need to know, in 1980, it was mostly speculators, like 2011, because silver was not a big portion of the industrial use. Now 60% is industrial demand. So regardless of price up to a point, people and companies will just keep buying silver and stockpile it. In the 1980s and 2011, the margin hikes had a big impact since most of the buyers were speculators. Also, government and central banks seems to have finally figured out that you need silver and a lot of it to fight real wars, monetary wars, and technology wars, especially when it comes to AI. And so that's something that's likely going to impact the market because they won't let the silver market run away without trying to do something. Doesn't mean it will work, but government intervention at this point is almost a given. What they will do, we don't know. How the market will react, we don't know. But it's likely that they will try to do something about it. Like we saw in China with the export restriction coming January 1st, other countries might start to do it as well. The other thing I wanted to mention was a tax flush. So basically, when you have an exceptional year like we just had in 2025 for gold, silver, and other things, it's typical for people to wait until the new year to sell it for the capital gain, to be delayed by a year in terms of reporting to the government for income tax purposes. And so that's something that may explain why the price has just kept going up, because there wasn't the selling pressure you typically see. So that was just a quick overview of things that I've put in the blog. You feel free to check it out. I'll put the link in the description. Now let's look at the new elements that just surfaced. So the first one, you may have heard about it, but basically there's a rumor has been circulating that a major and systematically important bank has potentially had a margin call and was liquidated because they were not able to bring collateral after the CME increased their margin requirements. So of course, we don't know if this is true, but here is where we get our clue that there might be something going on. This is the repo chart. So this is showing when people go to the Fed for emergency lending. And this was supposed to be solved. Remember, on December 1st, they stopped QT, so money destructions of money printing. Then they started printing money again with QE Lite, and it was supposed to fix issues. And yet we keep seeing those spikes. But the last two are really the most important one, because you can see that was on December 26th. Light volume, nothing happening except for silver. And today, on December 29th, another bigger spike. even though there's nothing much happening in the market other than silver. So you can see how when people go to the Fed for emergency lending, while silver is both crashing up and having a huge volatility intraday. I'll show you on the 1 hour chart. Like, this is kind of crazy when you look at it. From here to here, it was 10%. And this is a 1 hour chart. So you can see how there was massive volatility. And at the same time, people hit the Fed for the emergency lending. So when you put all this together, something is happening where it's not just retail investors, it's hitting even big players, potentially a major bank in the US. Now, I can't make a video every time there's a rumor. That's why I use the blog and my mailing list. It's free, and you can get access both to email alerts like the one that I sent on Saturday, as well as my monthly briefing report where I give you the most important that has happened in the past 4 to 6 weeks. So if you want to be ahead of the news instead of reacting to it next time, please check it out. I'll put the link in the description, and it could save your portfolio. So now let's talk about the good news. Why I'm bullish long term. A lot of people, I don't know if you saw other videos or article, they're comparing right now to the 2011 crash for silver, which is here. And as you can see, after a big run going up by 500%, it went down by about 75%. So basically, people are scared that the same thing could happen again because the CME was hiking around here very quickly, the margin requirements, which is why the speculators were liquidated and the price dropped like this. But back then, you only needed about 4% of margin to buy a contract for silver, meaning you could control $100 of silver by only putting $4. So that was a 25x leverage. That was huge. That was insane. Today, that leverage is only about 6 times because it's about 17% margin right now. They could increase it again, but basically, they don't have the same power that they had in the past, both because of the difference in terms of leverage and also because of what I mentioned earlier with, the current price being pushed up more by physical demand than speculators than in the past 2 bubbles. The second thing I wanted to mention is that there's a big divergence. Unfortunately, I couldn't get the chart to convert the Shanghai exchange in kilograms to the ounces in the US, but basically today there's been divergence. So while the price of silver was crashing today in the US, in the East, the physical price was actually going up. People were willing to pay a premium to secure physical silver and to stockpile it. And so that shows you how the paper market could potentially collapse like a house of cards if all the people at once try to get delivery, just like a run on the bank, but it would be like a run on silver. And so that's something I'll be watching. I have an example that I found on the report shared by a Bloomberg analyst about the commodities. And it was showing how last year people who built solar panels, they were paying about $28 per ounce for silver. Right now it's about 80, and their break-even point is about $134 per ounce. So that doesn't mean that 134 it stops. It just means the demand destruction starts there because it makes no longer sense to buy silver at that price if you cannot sell the finished product for more than what you paid for, basically. So this was a healthy reset. I think it's not done, but it's already a good start to flush out the leverage, the tourists, the people who were FOMOing into silver just because it was hot. And if you have cash on the sideline, this is one of those opportunities that could potentially present itself in the next few days or weeks or months. Not financial advice, I'm just sharing that I think this is a good time to have cash on hand for opportunities when they present themselves. So if you found this video helpful, please share it with someone else you know who could benefit from it. It will help the channel, but also help them potentially to save their portfolio. If you have any comments or questions, feel free to leave them below the video. And remember to invest smart, not hard. I'll see you on the next video.